We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up EUR, USD. We are on a 12-month time frame. Price action, last candle to right hand side, a bullish green candle, spike down to a low, second last candle, spike down to the low as well. Price action is inside that area looking for the breakout. We do have price action overall, higher highs, price action overall, lower lows. Midpoint, adding second level highs, third level highs, and fourth level highs. Current price is sitting at 1.08730. So if price work its way up, we are looking for price to tag that resistance line in white at 1.11518. Before tagging that area, it can tag the midpoint at 1.09756. If price action drops down, it can tag that support line at 1.01925 before tagging the midpoint in that area, which would be near the numbers of 1.05716. So if price pushes up, let's see where it's coming from. So price action started off first candle in the market, bullish green candle. That market, if we think about drawing an imaginary line coming down and identify that market pushing up for that overall first, second, third, fourth, retest one, retest. We're looking for the market to identify itself in here. So the last few candles are engulfing. We look for the engulfment for the last few candles in the market to see if that market's going to push up again. So it'll be first, second, third, fourth, retest one, retest. This will be the second push if it breaks out the area of the last few candles in the market. If price decides to drop down, where's it coming from? Price action did spike that high, green and red. So we have that overall first, second, third, fourth. Retest, market push down, retest. So it's a double top, double retest. Market broke second level highs and then identified another double top first, second, and then pushed back down to that midpoint. The second last candle in the market is identifying that is losing momentum towards that downside and may be a reversal. Price action is within that second last candle, so that market is consolidating, but we are looking for price action to see if it's going to respect that spike down too low with the second last candle. So price action, we can receive the engulfment from price action towards that second last candle, and that market will push up from that formation of that first, second, third, and we'll see that W formation push up. If the market does break and go down a further level, we can see that market identify the break, and then we're looking for the retest of that overall midpoint to see if that market's going to push down further. Walking down to the 6-month time frame, price action 6-month time frame is a bullish green candle spike down to a low. So the price action candle retesting the second last candle. Second last candle is identifying it lost momentum for the further push down, and it may be coming up. We are looking for a price action candle to engulf that third to last candle to see if that market's going to push up. Working our way to a 3-month time frame. Price action 3-month time frame reading as a bullish green candle spike down to the low. So that market is retesting the second to last candle to market, or a second and third last candle to market. So what that market is identifying is, it could be identifying a few things. So let's say if that market drops down on the 3-month time frame, we have that decline. It's coming from the what? The break, the retest. So that's the first, second, third, fourth. retest. So the market's retesting the midpoint of that double top If we receive a bearish red candle, that means that price action is having a hard time breaking fourth level lows, and we can receive a bearish red candle, which will identify the break, the retest, and that market pushing down further. We're going to wait to the monthly time frame. Price action, monthly time frame, bullish green candle. So price action is a little bit above our midpoint line. That's in that area between the white SR lines. So the break and retest could be identified as we walk down the time frame, or it can push up with the bullish green candle, push up further. Price action is retesting that second to last candle. So what's happening in that area, it's doing what it sees on the opposite side, because we have a spike down to the opposite side, and that's identified as the retest, and that market pushed down. So market broke, retest, and pushed down, and this opposite side is identifying the same thing but different colors. So what it's identifying is that the second to last candle broke the resistance line. As we can see, price action spiked down and created momentum, or lost momentum, and pushed up. So it's a break and retest in that area. It's happening the same design is happening on a different side but different colors. Working our way to the weekly time frame. So price action on the weekly time frame reading as a bullish green candle. So we did receive the retest with the third last candle. So when that market did identify, let's see where it's coming from that low. We do have that overall first, second, third, fourth, retest 1, retest 2, and we can see price action did break that midpoint, that area. That is a retest candle that did not engulf the second last candle body and wick yet, at least a wick. So it's retesting to see if it's going to push up further with this candle or following candle, or it can consolidate it, or identify a bearish red candle if it pops up and come back down for another full retest, as it did with the third to last candle. So it will be identified break, retest, push, retest, and it still push up. So if the price action is going to return back to our resistance line that's at our midpoint, the price action is going to return back to our resistance support line at the below, and that means that market is doing what? We're looking for market to break the midpoint. So it'll be as resistance, support, mid. So if that market start working its way down through that mid, we'll see that market will be coming back for that full retest to see if it's going to push up further. But so far, price action just retesting the top of that resistance turn to support to see if we're going to receive a push. Walking down to the daily time frame is a bullish green candle engulfing the second, third, last candle. So the market could still be pushing up further. Why? Because price action body is above the previous body. Price action wick is above the previous wick. So our market could be pushing up from that break retest, and then price action is the push. Working our way down to the 4-hour time frame. So now we're on the 4. Let's add our zone. Going a little bit above the SR line, a little bit below. So let's take a look at what's happening. So what that market is identifying is that price action is coming from that structure of that low. So we do see markets coming from that first, second, third, fourth retest 1, which broke through the zone, retest the top of that zone after the break, and we're looking for that push. So price action has to engulf the previous side bodies and may have to clear out those wicks finally to push that market up. And if we can see, if we tap the highest wick in that area, price did not break that highest area, it's tagging it. So it can be denied if we receive a bearish red candle after this candle come back down for a retest, and you'll just take it to level. So near price will be the high, we see the mid, and then the bottom of that zone will be the low. And then if it runs into that resistance, you'll see that first, second, third, and create that double top structure unless price breaks. It slightly did break with the second last candle. Price action will be the retest, and we'll see if it's going to follow up another candle to push up with bullish and green, unless the price action candle is actively pushing up further. Okay guys, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention. EUR, USD.